Hey everyone, another month on, and although not big growth that we might have seen in previous months, growth nonetheless in my portfolio month over month. What have we had news-wise since we last spoke last month? First off, the Fed meeting in which they raised rates a further 25 basis points, 0.25%. Tesla had their actual earnings meeting, which was a solid performance with some good news, some bad news, positive overall I think. And lastly, delivery of my Tesla Model 3 that I said I was getting. Let's dive a bit deeper into the Fed meeting first. So yes, the kind of macro level bit of news is that they raised the rate by the 25 basis points, and that they didn't really change the wording in the meeting minutes that came out. This is due to the US having a pretty strong economy at the moment actually, and the Fed can't really let their foot off the gas at the moment, otherwise we could see inflation spiral back up to the likes what we saw in the 80s, not that I was around then. If you look at true inflation, which is an account on Twitter, or should I say X now, it's been renamed, they track what the real-time inflation is with a wide range of data feeds that produce that overall macro number. If we look at what inflation was on the 2nd of August, according to True Inflation, in the US it was running at just a little over 2.2%. So if the Fed were to see and use this like up-to-date information, not the lagging information that they potentially use, I think we're probably heading towards deflation, as a large proportion of inflation that is lagging is the shelter figures, which are still high in the kind of the mass that they're using to come up with that number. I personally think that we're done with Fed rates, or I would be if I was in Chair Powell's position, Jerome Powell. But as you can imagine, that's purely down to the incoming data that the Fed sees, and what we need to watch out for are these key dates, and they are this Thursday coming and also on Friday, when the CPI and PPI are reported respectively, Thursday, Friday. If CPI comes in below the 0.2% that's expected, we could actually see the Fed once again pause rate hikes and actually let inflation reduce naturally and play out over the next few months. The Fed have already said that they're not going to begin cutting rates this year into 2023, but I think we could see rates being cut in as early as January, February of next year, 2024. Next up, Tesla earnings. A mixed bag, really, if I was to kind of summarise it. Record deliveries that we got at the start of the month, start of July. Then a beat on both profit and revenue, with nearly $25 billion of revenue in a single quarter, which is astonishing, really, where they've actually come from in the past 10 years. Back in 2017, they were going to go bankrupt and bust, most people thought. On a slight negative, but there is a spin on this, operating margin dropped to 9.6, which isn't great, but it's hopefully a bottom. And we should start to see this grow again, as both Berlin and Texas gigafactories are still in the ramping phase. So the costs are not being fully spread out, shall we say, across the large number of cars that are going to be produced at those factories, which we see at both the Shanghai, China factory and the Fremont factories. The services area of Tesla's business continues to grow as expected, as well as the margin on energy in the high teens now. I think it was something like 18.4% or 18.6%, which is higher than most people were expecting, and it just shows that, or it's beginning to show, Tesla are not just an automotive and car company, hopefully. For me, they're an energy solutions company, as weird as that sounds. Cash on the balance sheet is at an all-time high at just over $23 billion. Therefore, a rock-solid company, in my eyes anyway. Others will disagree and say that I'm a fanboy, but I'll leave them to that. We'll see in a few years if I was just a fanboy and Tesla go bankrupt or not. But overall, I'd say that I'm pretty happy with the quarter, considering the price cuts that were made early on, and they had a bit of an impact, hence the 9.6% operating margin. But onwards and upwards from here, hopefully with the touted Highland project, which is the newly revamped Model 3, that's set to go into production this week, next week sometime. Final bit of news before I do give you the kind of how's my portfolio done. the news I gave you about getting a Tesla Model 3 myself, well, here it is. Take a look at the pictures. It was delivered at the back end of the month, and I'm a happy boy. Happier than I expected to be, actually. It is a really nice piece of tech, really nice piece of metal on four wheels, shall we say. Yes, the inside, some might consider it basic, just a big screen, just two stalks and no knobs or buttons, which people seem to like. But for me, it's just efficient. And when you're driving, it's just such an ease to do. You don't actually have to do the driving. The adaptive cruise control and the safety features that are built in as standard are pretty damn good. Lane keep is just natural. You have to give it the first 2 or 3 minutes of letting the car do the driving for you. You have to give it a bit of trust and let it do its thing. But once the cameras are calibrated, it's brilliant. It just feels natural. And the visualization of the world around you that it does on the screen is just brings a little smirk to your face. Oh, they are actually making great progress with this. And I genuinely didn't expect it to be as good as it actually is. The software that you get as standard in the car is, well, next level. I've had luxury cars over the past 5-6 years, and this is just a level above that, for the same price as what I was paying for another luxury car. I can understand why Tesla bulls rave about it and the technology and say that Tesla is in a league of its own. It is. Yes, I know others will argue, but they need to go sit in a Tesla and experience it for themselves, really. I don't know how else to say it, really. It's been said on YouTube by others. Tesla is a league apart from everybody else. A league above, actually. Let's switch over to why you've probably clicked on the video. How has my portfolio actually performed since last month? So at the end of June, my overall portfolio, both my ISA and general account combined, was valued at just over £156,000. At the end of July, this grew by just under £1,800 to £157,796. This is a 1.1% increase in a month, which is half of what I'd like it to be, based on the average that I want to hit, about 30% a year growth. But as I said before, growth nonetheless. Short and sweet on the update, but until next time, stay safe.